All right, greetings traders. Sam here from TradeDevils.com and TradeDevilsIndicators.com. And today I'm pleased to introduce you the latest version of the Trade Devils Order Flow Tool Suite. Now I have the full suite of tools here applied to this chart. This is an 8 range of the June S&P. I'm recording this on Sunday, April 11th, as you can see down here. So I've just got Friday's price action in front of us here. Now we're going to go through each of the individual components of the tool suite here. But before I do, let me just give you a little bit of context as to what we are trying to achieve here and how it would relate to a more traditional order flow template. So most traders, when they hear order flow, they immediately assume that they're going to be looking at something like this, a footprint chart here, where we're going to get, of course, we have this great detail that we get to see intra-bar in terms of the battle between buyers and sellers and where that price action is happening. And we've got all of this detail down here in this almost like an Excel spreadsheet kind of a format here, where I can see the total number of trades, the volume, the delta bar, the delta percentage, the cumulative delta. I can see all of this detail and the cumulative delta down below. Now this is just the native order flow tools that are available in Ninjatrader 8. Now some of you may have made that upgrade, others, many of you may have not. So to some degree, we were looking for not only a different way to represent this information, but an order flow solution for those of you that are using NinjaTrader 8, but perhaps have not made that upgrade into the order flow tool suite for what could be a variety of reasons. Now, for me personally, while logically I can understand what I'm looking at here, having said that, and I certainly respect that there are many traders that are able to look at this and trade it successfully. For me, when I'm looking at this, I constantly find myself wanting to zoom out. I'm looking for some perspective, as in, okay, you know, if I'm down here, I'm not sure what I'm doing. If I'm out here, oh, I can see, all right, well, you know, I've got a swing off of a low here, maybe a retracement, another swing. But as soon as I pull out here, well, now I'm losing all of that detail here, and I've got to constantly zoom out and zoom in. And I think that the danger here, when you're on the hard right edge looking over here, it's easy to lose context, right? Or perhaps you're losing the perspective of the forest because you're focused on the individual tree, if you will. So what we were looking for is a way to represent this information in a format here that would be more appealing to a visual trader or a pattern-based trader or a retracement trader, as I am. So that's where we started in terms of how could we represent this information so it could be just as useful, but not have to be focusing on the individual bar context where I'm trying to look into the bar and look at the intra-bar activity here without losing that perspective as to where I am in the larger trend. So that's what we were trying to do when we embarked on this. Now we've had a few attempts at it, and we think that what we're releasing here in version 2 is ultimately the best solution, and we think the most tradable solution. So let me, having given you the context here, let me show you this. And of course, we're going to look at the individual components here one at a time, and this is literally exactly how I trade it. This is my template as I trade it. But I want to look at the individual components here piece by piece, so then we can put it together and you understand contextually what you're looking at here and how you can get some benefit in terms of applying it to your trading. So let's start with the foundational piece, which is what's on the price action here. So what I'm going to do is I'm going to go over to another chart here where I have just the delta volume swing indicator applied. So let's go in here. I'm just going to pop up my indicators here, and we'll take a look in here. So what I'm showing you here is just here. So of course, let me just reference this. I always have the initial balance on. As you've heard me say many times, if you don't use ours, you must have the initial balance on. You have to know where it is because the market and algorithms pay close attention to it. So you have to know where that is, right? So again, if you don't use ours, use somebody's or mark it yourself. So that said, so I have the initial balance indicator on here, and then I always have our toolbar, so for quick access to all of our custom drawing tools and some of the native tools within Ninja. So that said, let's focus now here on the delta volume swing indicator, and that's what we're looking at on the price bars. Now, when you first get it, if you click everything on, this is how it would first appear. Now, we give you a couple of choices in terms of how you apply this. So let's focus here just on the swing type. So we're giving you 4 types here of swings that you may choose. The Gann swing, which I prefer here, which is just a Gann's simple identification of how we would define a pivot. So for this to be a pivot low, I've got to have 2 higher highs that come off of this pivot to define that as a pivot. As a pivot here, and then coming from a downswing to an upswing, if I'm looking here at a potential pivot that would be a peak of an upswing and starting a downswing, I need to have 2 lower lows. We don't count inside bars, right? So it's a very simple way to define a series of swings. But that may or may not appeal to everybody, and you might have more swing content here than you want. So we're giving you 4 choices here. You could go to a swing indicator, and then you would be defining the swing strength here based on your preference. We could do it with a traditional zigzag here. Well, now you'd look at your zigzag parameters here. Do we want points or percent with regards to the deviation, the value of that deviation, and then whether you wanted to use the swing highs or the swing lows, or perhaps the bar close. I prefer swing high to swing low, so I leave that checked. But those are all of the options that are available to you. And then we have the price action trading here, which is the 2-legged swing. I'm not going to go into that much here because we've got not only an indicator but a full video dedicated to understanding that. So I'm going to focus on the 3 that I think are most useful here in this context, but I'm going to prioritize the Gann swing. That's what I use, and I think certainly I can speak from my experience working with it here. Not that there's not value in these others. It's to some degree it's a function of the type of trader that you are and the degree of swing detail that you want to see. Right? So, but you've certainly got plenty of options there. Now, show the swings, don't show the swings. Literally, do you want to see the lines on the chart? Do you want to see higher highs and higher lows? Right? Some people say, well, it's pretty obvious, but it can be helpful. So some people prefer to leave it on. So do you want to see higher highs and lower lows? Right? That's certainly an option for you. Then we've got the choice of total volume. You see here in white, so I can see the total volume on that bar, which I like to keep on because I want to look at total volume in relation to swing to swing. The delta volume, right? We've got that here as well. The delta volume percentage, and then whether I want to show the volume profile, which you can see right here, which I choose to keep on. You could take it on, take it off, depends on whether or not you want to use it. I'm going to show you a couple of examples as we get further into the video of how that can add real value to a trading decision. And then after that, the bar timer. Now this would be functional only if you were working with a minute-based chart. So if you had a 1 minute, for example, it's going to give you the countdown to when the bar finishes based on that time factor and when the new bar starts. Your choice to paint the bars or not paint the bars relative to the swing. So as we're in a downswing, all the bars are of course coded red, and if we're in an upswing, all coded in this kind of olive green color here. I would suggest that if you're doing that, you work with a hollow body bar so you can see an up close versus a down close, or an open high-low close, whatever you prefer. I like to use our hollow candle so I can see whether I've got a series of up bars or if there's a down close here within that upswing. Right? It's just personal preference. As we move down here, so all of that can be labeled here, and then below here I have the delta volume percentage bars, which I have checked on, and whether or not I want to see those bar labels. Okay, so let's go down and talk about that because this is an important optional feature here. So let's just focus here down on the chart. Let me give this a second to reset. Okay, so let's just do a couple of distinctions here and a couple of definitions. So first, and of course many of you may be well aware of this, but let's define delta. So delta it's a very simple formula. It's simply the difference between the market buy orders and the market sell orders. It's often described as, however we come up, whether it's a positive delta or a negative delta, as who's the more aggressive, and that aggression being defined by the market orders. So if a move is rolling here and you see more market orders coming in, the premise of delta theory is that buyers are more aggressive. Here we've got sellers being more aggressive. So it's open to some interpretation. Some people would differ with that, saying it's not necessarily a lack of aggression, as for example, a hedge fund or an institution or a bank may not be just ripping into the market with market orders. They may have very strategically placed limit orders or even some iceberg orders that would be done at a limit value. So, there's an open dialogue as to whether or not that label of aggression is really accurate, but we can certainly use it when we see these trends being established. So what we're looking at here is, let's just focus here on this particular swing before we get the massive rip at the end of the day. So I'm going to open this up a little bit so we can look at this. So in the delta volume percentage here, what you're seeing is a bar by bar recounting, much like what you're looking at over here in just a different format. You're getting the percentage of delta in individual bars as this swing is moving and developing along its way, right? When it starts, you don't know, I mean, you're getting it one bar at a time. So I'm looking down here saying, okay, again, I'm going to use the language that's most typically associated with delta. Who's the more aggressive here? If I've got more buy market orders coming in here and the trend is continuing on, I can make the deduction here that buyers are more aggressive through the series of this upswing. But what we always felt was missing was in a traditional footprint chart here, I'm getting that bar by bar detail, but what I'm not getting is the swing by swing detail, which I'm more interested in because I'm interested in what's happening in the relationship of one swing to the next. So let me put that in context so you understand what I mean by that. So while here I'm getting the bar by bar delta volume percentage. So let me give you an example right here. Because this is kind of an anomaly here. So if I look at this bar right here, let me get my crosshairs, right? So if I look at this bar right here, okay, so here's the bar right here. So I've got a down bar in a down swing. But look at this stands out here. So I've got 99.86% negative delta. Meaning that of all the volume in that bar, 99.86% of it was sell market orders. Now, it's important to make the distinction between delta volume and actual volume. So while at first glance you might look at that and go, oh my God, look at all the sell volume that's coming in there. Well, not so fast. In fact, to help you see this, I'm going to go ahead and put on the up-down volume here so you can see this. Okay, because I think this is something that people, they misinterpret when you're looking at delta volume. Did I turn that on? Let me let's get it on here. I thought I made that visible here. So give me a sec, and we'll get it right back. So here's my delta volume. Okay, let's make it visible. Okay, so let's click OK. All right, so let's focus on this bar. Jesus, assuming I can get this to pop. There we go. Okay. So now, back to this bar where I have this very high negative delta count. Well, look at the actual volume here. So this is a low volume bar, certainly in context here. This is a very low volume bar, but within that very low volume bar, 99.8%. I'm in trouble with that. 99.86% of it was sell market orders. So you got to be careful about that popping there, and you're thinking to yourself, oh my God, look at all that sell volume, which is why it can be, and particularly as you're first learning to trade this, it can be valuable to have the up-down volume on or underneath, which is why, there's a purpose here, which is why we give you the option of putting that on the chart or under the chart. So let me get the crosshairs off because I know that can be annoying. So as you look at it here, this is a new panel where I have the up-down volume. This is the same chart. So this is all the price chart here. So if I hit reset here, so you can see, oh, well, wait a minute, that's bumping into my chart here. So I may or may not want that there. But we give you that option for a couple of reasons. Now, you might have a series of additional indicators that you want to run on here because you can just you don't have to apply the full suite. You can just apply the delta volume swing indicator here and get this information here because this has value. But it can be useful to put it in the context here of here's where the rip starts. I've still got down volume here that's happening here. So you got to be careful about looking at this and going, oh my God, that's a whole bunch of sell volume coming in. It's just bar by bar. Now, what we set out to try and do is make the distinction between bar by bar delta volume and then the swing delta volume. So what I'm interested in is the relationship of the delta volume percentage of this swing, for example, relative to this swing. do I have a trend starting? Well, I have a swing. I have an internal retracement that goes external. So I do have a retracement that leads to a new low here. But I'm very interested in what's happening in the collective delta of each of these swings, so I can compare swing to swing. Now, you look at the chart that I have in front of you and you go, well, how are you going to do that, right? How do you, well, I can see that I have a swing here that's defined by our Gann swing pivots, but it's not giving me any information here with regards to the delta of that swing compared to this swing, compared to this swing, compared to all of the swings throughout the course of the day. So that's where we give you the option to put this delta volume percentage either on the chart, right, for this being an example of how you might apply that with some additional, you might have a, I don't know, one of our indicators, the devil's edge, the wicked wave, or you've got a stochastic or an RSI, or whatever your preferences for additional indicators that you'd be using for confluence to determine whether or not you want to enter, buy or long, or stay out of the market. So let me show you this applied as an option. So I'm going to go back here to the full template. Now here I've taken the delta volume percentage that you see right here, the delta volume percentage, right, of each bar, and I'm putting it into its own panel. So unlike over here where I can't see the relative value here, so for example, let me show it to you this way. If I take that number off, if I take the labels off, so if I come over here to my delta volume swing and I take the labels off, okay, so now I click apply. Right, well, now I don't get the relative context. I can see that it's much higher than what was around it, but I don't see the percentage. Now, if I come over to the other template here, I can look at this and then I can look right and say, well, hey, that's almost 100% of that volume. Of the percentage of market sell orders was almost 100% in that bar. Again, not volume. Delta volume percentage. So as I look at this bar, what I'm looking at here is, as I open this up, what I'm interested in is the cumulative delta of each of these swings. Now let me back up, having said that, because most of you may be familiar with the idea of cumulative delta, right? So again, this is much like you saw over here, right, in the standard footprint chart where we have a cumulative delta. It's often represented either as a line or here as it is in candlesticks. Well, cumulative delta is giving you a running tally over the course of the day of what that formula comes to. So again, it's the total, again, simple formula. It's the market buy orders minus the market sell orders. But in cumulative delta, it's a running total throughout the course of the day. Right, including here, right, I've got the overnight as well. So it's just a constant running total of that formula throughout the course of the day. So as a result of that, it may or may not have any influence in a trading decision that I would make here relative to a swing by swing comparison. What I'm looking for is that swing by swing comparison. So if I come down here, I can see that in this bar here, in this swing, I can see the cumulative delta that happened within that swing, in addition to the delta percentage bar by bar. So I'm getting additional information here that I don't get in my footprint chart. Right, now remember, I'm looking for swings and retracements, so that's important to me. So I want to see the relationship between this downswing relative to this downswing. Am I seeing an increase? Are buyers getting more, are sellers getting more aggressive here? Now, let me give you a couple of examples here, because the S&P it's not a great week, or as I always say, I always use the most recent week. But we had so much rotation, with the exception of some end-of-day ramps. Most of the week was all just rotation. We spent the majority of the time inside the IB. So what I'm going to do is go all the way back to Tuesday, right, and show you a better example of this. All right, so here's you can see the calendar here. So here's April 6th. So it's Tuesday, April 6th. I'm just going back to show you this in context so you can see it a little better. Now you will note right off the bat, this is just my personal preference. I like to put the volume profile in this kind of gray and blue. Again, it's just I'm used to it from our volume profile indicator. I should mention that I also have VWAP running across this. But I want you to focus over here, because what I'm looking at are those swing relationships that, while I can get that bar by bar data, I want to look at the swing relationships and then any information that I can glean from what's happening up here at some of these pivots. Now, of course, you will notice there are a few indications here of things that are happening here. These are signals per se. We're more identifying an event here rather than per se a definitive signal. We'll get to those in a second. But what you see here as we come up to this high, so coming off of the open, we get a straight swing higher, and you can see that reflected down here in the cumulative delta. So throughout in fact, we color coded as well for you. So through the course of this swing, I've got all of this positive delta percentage here. So I can see the cumulative delta. I can see the bar by bar relationships. But what I'm interested in is the swing relationship. Now, note what happens here. So I get up here, the swing pivots. Now here per the Gann swing, I get a pivot here and I come down. Now I come down, I get a very small retrace, but then as I go up here and I make a new high, look what's happening to this swing delta here. So I'm going from right here as I start right here and I'm going up. Now, well, let's see, I guess I should draw it down here so you can see this. So while I'm making a new high here, in this case, it ends up being the IB high, but you wouldn't know that. It was, well, it's 10:26 in the morning. It's just about to confirm as the IB high. But as I'm making the swing higher, look at the cumulative delta. Right, it's negative. So if I were looking at this in the market and I'm thinking, hey, okay, I've got a swing, I've got a retrace, it's actually a pullback. Here I get a higher low, you see that? I've got a good amount of delta. I've got a negative delta on the downswing, right, which would be typical. Now I might be assuming that that's going to rip roar off to new highs here. Swing, retrace, I'm looking for a push up towards some of these higher levels up here. But this is telling me, hey, caution. And so not only when I get up here and make this pivot, I develop a pivot, even though I get a higher high, well then look what happens. Now I've got a, look at the, again I'm going to use the word aggression, of sellers as I come off of that. Now I've got a much more, look at the relationship here. So I've got an upswing here, I get a new pivot high, but look at the cumulative delta of those two swings. Now I start again, I make another attempt here. Now what do I get? Lower high, right? So the delta here again, even though it's an upswing, the delta is negative. The delta volume percentage is negative. Individual bar, so you can note, right? You can see it. Oh, crosshairs off. Oh, bear with me here. So I can see in this bar here, as I come up here, I get this nice upswing here. So I have high 20, so 20, let's call it 24% of the volume within that bar is buy volume, right? Or pardon me, buy market orders. I should say, I've got to be careful in my language. Buy market orders within that bar, which is creating the upswing here, and I get an uptick here. I get a higher bar here, but I end up with a lower high. So even though I have this positive delta percentage here, the cumulative delta of that swing is negative. Now I get a lower high. I also get an imbalance here and this is a reversal here because I go from an upswing to a downswing as I get two lower lows. Remember the Gann swing analysis. So let me take that crosshair off. Right. So then I get another swing high. Again, look, even though I'm getting higher highs here, I get a higher high from this high. Again, negative, well, pardon me. So I get negative delta here, and then I get one little pop here. One tiny little barely pops there. Then I get another imbalance here. We'll get to that in a sec. Now, yet again. Right, so hopefully you kind of see the value here. I've got buyers are not interested in here. I have no aggression amongst buyers, and I know that at this point in time, it's now well past 10:30. I've got an established IB high, and we know algorithms are active at the IB high, and very common that they will fade. It's one of our cornerstone trades here that I don't know anyone else who teaches it, but it's one of our bread and butter trades. The first test of the IB high or low has a very high failure rate because algorithms are sitting there, they fade it. So the IB high is not established here. We're not quite at 10:30 here. Here's the first test of the IB high, right? And you can see the result. Right, it's first test, right? So typically, what we will do, right, if we're looking at this trade, we'll take it to VWAP and then reevaluate. Now that's how I would do it here because you don't. Now look what's happening to the delta. That's more than you realize, right? So assuming you didn't get the absolute pivot turn, that's 31 ticks just to VWAP, right? It's very, very common to go from the IB high to VWAP and then maybe stabilize there, and then the market decides which way it wants to go. Let's see, and then just to carry on with that point. Here's the first test of the IB high on this day. Remember, the whole week was rotation, so you saw this throughout the course of the week. Something to pay attention to. Here's the first test of the IB high. Here's the first test of the IB low. Right? what comes off of that, right? Straight to VWAP to close the day. Pay attention to that if you don't know about it. It's one more reason why you absolutely must have the IB marked on your chart, right? So, but I digress. But look, as we're coming down here, we can just stay on this day because it's a particularly good example. Again, bar by bar, okay, I see that the delta percentage is, I'm getting 10, 20% of the volume within this sell-off here. I've got these bars where sellers are more aggressive. I'm going to stay with that terminology. But look at the swing cumulative delta here, right? Sellers clearly in control. Now I come back here and I make a retrace. Well, look here. So as would relate to the aggression of buyers making that swing as we retrace here back towards the opening range high. Well, I don't have much interest amongst buyers. Right? They're not very aggressive here. Now here's another, this is one of the reasons why I like to have the volume profile on here and where it can add value. So if I were looking at this, I sure want to pay attention to when I come back to that high volume node here within this swing. And here's my POC. Right, I come right back to it, and I have it here again within this swing here. Here's the POC of that swing, but I'm looking back historically. I could even take it back further, right, and say, okay, here was a high volume node here, a POC. We chop here. Here's all the chop with all the failure swings up here. Now we come down as I make the retrace, and I'm just wondering, are we right? You don't know what's coming at that time. You're sitting here looking at it right there. Right? Let's see, you wouldn't know that bar. Now you're thinking, hey, am I going back up to blow out the IB high here and we're going off to put in new highs on the day? Well, I sure would be paying attention to where the volume was. And as we come off of that, right, again, right, very little enthusiasm, let's just say it that way, very little enthusiasm amongst buyers. Delta volume is flattening here. So again, this doesn't mean lack of volume. It just means there's nobody in control. Nobody's more aggressive than the other side. I start to get a little more aggression as we come down back towards VWAP. Right, first test the IB low when we come back up here. So this is where this can just offer you some value here as you're looking at this. But again, I want to emphasize you don't get that in a traditional footprint chart. I don't get the swing to swing cumulative. I just get the running total. The running total to me is the least important of everything I'm looking at here. Now look at this day. All right, so let me take all this stuff off. Look at the course of this day. Right, so the cumulative delta was negative all day. Does that mean there are there's no place in here where I want to be a buyer? Well, not necessarily. I mean, there's a few swings in here. Now, we did have a series that was throughout the course of the day. We had lower highs and lower highs. I mean, other than the range that we put in up here where we stalled at the IB high, stalled. Look at the cumulative delta. Now, again, it's not that there's not some value in the cumulative delta. I keep it on the chart. But you got to be careful about overemphasizing the cumulative delta. It's much more important to me what's happening to the cumulative delta of each swing as it compares to the prior swing. Now let me go over these signals here because I've kind of jumped ahead of myself here. But this, if you were to load this up, these are going to be all turned on. Oh, here I'm back to Friday. Okay, so let's just look at these here, and let me go back into the indicator so that if you were to load it up, if you were to request a trial, and you were to load it up, it will start like this with all of these turned on. So let's go back to the delta swing and go through these one at a time. So here are the signals. We're using the word signals, although I would consider them more of a notice, right? So heads up. So what we're getting a couple of things here. So we have three types of signals. So we have the reversal volume type. So delta volume or total volume, much more important to me to see the delta volume because what I'm looking for is a potential imbalance, which you see noted right here. So in an upswing, you'd expect the delta to be positive above the mark. You think of it that way, above the swing pivot high. So here I have a positive delta. Now here I get an upswing, but I get an imbalance because I get a negative delta here. Right, and that's what we were just looking at, all those imbalances up on Tuesdays where we were at the IB high and we had negative delta. Right, so we have more sell orders than buy orders even though we're in an upswing. So that's a heads up to me. Now, it doesn't confirm per the fact that we're using the Gann swing to define the pivot. It doesn't confirm until I get two lower lows that come off of this. But once I confirm that, that tells me, note here, we're doing it right at the opening range high. This is telling me something. Okay, I've got an imbalance here. Prior to that, I also had an imbalance here, but I also had a reversal signal. Now, reversal is the next type of signal that you've got the the capability for the market to identify this. So in a reversal, we're just using a reversal of the Gann swing. So if I get a new pivot and I'm going now in the down direction, it's identifying the fact that I've reversed here. So you can almost think of it by color. So am I reversing the trend here? Do I get two lower lows? So I've got a reversal signal based on delta volume or total volume. Do I want to show pullbacks? Well, a pullback is defined as, first, it must stay internal to the prior swing. Right, so we can't take out the low, or obviously no longer a pullback. So it's an internal retracement, and the volume in the pullback must be greater than the swing in the same direction that preceded it. So if you look right here on this pullback, I had 8,880 was the total volume. On this pullback here, I get a swing, I get an internal retracement, but I have much higher volume here. So this is 24,595. Might be a little hard to see on the video, but so I have a dramatic increase in volume here. So I've got a swing, retrace, more volume, up we go. So I get a reversal per now going from red to green, but I also get a pullback via that criteria. Right, then, so we've got the reversal, we've got the imbalance, and then we've got the pullback. So again, just to, hang on, it takes a second. Let me get back to Tuesday because that's such a good example. Oh, sure, let's do it over here. It's back to Tuesday where we look here. We're looking because this is just really makes it clear, crystal clear. Every one of these pivot swings here, I get an imbalance. So for just quick eyeballing of it, if the swing is moving higher, I'm expecting, depending on your color coding here, I'm expecting the delta to be positive and above the market. Right, so I get this nice upswing here. I look and quickly I can see I've got green up here, so I've got a positive delta. It's positive delta down here as well. Right, so the cumulative delta percentage of that swing is positive. Now here's my pullback. Right, so it's higher volume than this pullback here. Right, so it's always relative to the swing that preceded it. Here 38,421. Here 41,057. So this is a pullback signal. Now I go up and I put in a higher high here. I for imbalance, right? So so just so you don't miss it, right? Is you're in the heat of the battle that you don't miss. Oh, I've got red up here. We're telling you there's an imbalance here. So I've got a delta imbalance, even though I've got a higher high. More sell orders than buy orders at that pivot, right? So higher high, down we come. Now I go up again. Now I'm pushing, right? So you don't know what's coming right there, right? Always easy in hindsight. So you're looking here, you're saying, okay, am I going here? Well, up here as I get a pivot, I get another imbalance and I get a reversal. Again, going to break that IB high. Are we going to push? Is this the time? Is this when we get it? Down here, right? Again, it's not very accommodating to bulls. Another imbalance, right? Bears overwhelm, more sell market orders, take it down. Last try. This is officially now we're at the IB high. So I've tried 1, 2, 3, fourth time, right? Again, look down here. Imbalance as I'm at the IB high. Now that's a trade you seriously want to consider taking because of all that. I mean, again, this is not rocket science, right? So you've tried 3 times up here at the IB high. Now I'm assuming that you would know that's the IB high, right? That you would have the IB marked on your chart. That you would know, hey, that's a candidate here for a short. Now, whether you're scalping it or whether you're trying to ride it all the way down to VWAP or you're trying to ride it all the way down to the IB low, this is a heads up. Hey, pay attention here. Not only what I'm looking at here, but I'm getting a series of imbalances as I'm tapping that IB high. Down we go. All right, I come down here. Where's my next imbalance? Right here as I'm coming back to VWAP. So I also get a reversal. It's not a pullback. Now, note this, right? It's not. So you might say to yourself, well, hey, why isn't that a pullback, right? So I swing down here. I get a retrace, and then I go, why don't I have a pullback signal there? Because the volume is higher here. The last upswing here, 42,884. The next upswing, 37,819. So it doesn't qualify for the criteria of a pullback, but I've got an imbalance and a reversal. Just noted here, I don't have the bars color coded here, so bear with me here. Let me get that. Paint the bars here, right? Option you don't have to do. I actually kind of like to have it on. So that will paint the bars. So now I get the paint bars here. So I'm coming up here. I get again. I'm gonna get. Get all of this for you guys. Okay, so I'm going to use our hollow candlestick bars here so I can see that. So I want to see is an up bar or a down bar here, so I can see that this is a down bar within an upswing, right? It's the precursor to the pivot being established, right? So as to whether or not I get a reversal, R for reversal, right? Do I get the qualifications per Gann to create a pivot here? I do. So I get an imbalance and a reversal down. I go to the IB low. Now I get to the IB low here. Now what do I get down here? I can see I've got a negative delta, and then I start pushing back, and I finish the day right back to VWAP, right? So this, so again down here, so through the course of this swing, look at what I'm getting here, right? So I'm seeing all that, and again, we background code it for you. So if it just to make it, as I will often call them, these are dumbass filters. Hey, dumbass, let's not be looking at a buy here, looking at based on what's happening below, and then look at the individual bar delta percentage. Negative, negative, negative. Where does it turn? At the IB low, and off we go to VWAP. Now, the rest of the week was just so god awful, right? It was just rotation, rotation, rotation. Oh, here's it's not the IB high here. Here we get a couple of pops below the IB low. We ultimately get a reversal here. Here. Another good example here. Again, I'm just going to kind of show you as many examples as I can here. Note as we're coming down here. So we get this big. Let's do it this way. We get this big sell-off down here. So the delta volume percentage of this swing is very negative and increasing. Even the cumulative delta, right? We get a big sell-off here. So this is all negative delta. But look at the difference here is I'm relating these swings once I come down here, right? Now our sellers as aggressive down here. Now again, one more time. I get a new low here. What's happening here? Right? Cumulative delta is still very negative. And the individual bar to bar, okay, I'm getting some value, but I'm getting much more value off of the fact that I can look at the swing relationships. Now, note here, on the other side of it, I swing up, what do I get here? I get another imbalance. So where I should be expecting positive delta in an upswing, I get negative delta at that bar, at that pivot. We're making note of that by letting you know, hey, you've got an imbalance here. So you might look at that and say, well, hey, so I've hit IB low, I've come back to VWAP, right? This is probably the most common pattern in all of the futures market. So we go from IB low back to VWAP, now we're back to IB low. Well, that's 300. That's a 30 tick swing. It looks smaller to your eye, right, on an 8 range. That's $375 swing. But note down here, am I at this point thinking, hey, I got a swing here and I'm going to keep going? Well, maybe not, right, based on what you're looking at down here. This is where you got to be careful about cumulative delta, because if you're just looking at the cumulative delta, well, it's, bears are fully in control. We're going to new lows. We're going to go challenge that pivot because it's game on in cumulative delta, because remember, this is just a running total of what's happened thus far. Less value. In fact, I could almost do without this. I de-emphasize this. I emphasize this. So now as we come back up, now look, right, so this is the kind of thing you'd probably want to avoid. Right, all of this, who's in control here? We're just, bouncing around VWAP, right? So nobody's in control until we get the final rip, and in the final rip, okay, well, cumulative delta turns. We get the swing delta here, right? Am I just going to keep going and keep going? Well, not necessarily, right? So you get the nice positive delta up here. We come back to the IB high one more time, right? We're testing the IB high. One time we test it, I'd look left saying, okay, well, where was the volume the last time we got up here? I'd sure want to be paying attention to where those high volume nodes are and where the POC was up here, here, and here, right? You see the value of having the volume profile on that swing. So I come up here, I know where all the volume happens, so it's not unreasonable to anticipate there'd be some resistance here. Now look at the aggression of buy orders. If I can get this to pop for me. Right? We're losing enthusiasm. Okay, steady here, but once I make that turn, boy, bears, right? So we go from IB high to IB low, right? Then back up and finish with that little squirt at the end of the day. Oh, looks like you got a measured move there as well. All right, so looks like you got a swing right back to the 50 at VWAP. So again, you're on the edge of value here, and you're just, again, kind of looking left. Okay, is that something I want to consider taking? Well, again, this is end of the day, so that's the last 10 minutes of the day. This is higher risk, right? So we all know, right, if you day trade the S&P or any of the indexes, very common for algos and institutions to ramp, right into 4 and beyond 4, because the liquidity dries up and they can ram the price higher, right? If you've traded the S&P for any length of time, you see it happen on a very regular basis. I mean, look at Friday, right? I mean, Friday being a classic example, right? They do this. Oh, here, you know, all right up there, right up to a little after 4 o'clock, right? So this is all in the last 5 minutes of the day, where it's retail typically shouldn't be trading, because it can get very squirrely here. But you do see, I mean, that's a massive move, right? What would we get there? 20. What did we get? Almost 80 ticks, a little more than 80 ticks, right up to the pivot high. Oh, when did we make that pivot? Now I get the crosshair. I don't know why I can't get that on here. It's because I'm not connected to data. So that happens right at 4 o'clock, right? So there's the pivot right as we close, right? Last little swing up. Interesting here on Friday. Look what happens here as you're making this throughout the course of the day. We come back here, so we get. Oh, let me get that off. I know that's annoying. Get that off. So as we make the downswing here, and you're right here, even on Friday, you're looking ahead like, whoa, that's pretty. Right, that sellers got pretty aggressive here. So head fake. Look, it's just now 3 o'clock. Of course, right? It's always easy in hindsight. So you're coming back down here. I'd be sure as hell be looking left, saying, okay, what happened the last time we got down here? Well, here was the POC of this little swing. Now we're coming back towards this. There's the pre-market high, right? We know algorithms, anything an algorithm can respond to, it will. So the pre-market high, pre-market mid, pre-market low, the opening range high, the open, prior day's close, all of these are just where algos respond. So there's going to be an algo tied to every one of those. So as I come back here, I know that there's potentially here, there's going to be an algo that will be responsive as we come close to that. But you might be saying, do I want to be on the pre-market high? Do I want to be a tick or two in front of it? Well, once it starts to go, you look down here, once we start to get the kick here and the bars start to show you buyers are getting more aggressive, and again, this isn't the greatest example because we came from such chop. One swing, one retrace, up we go, right, to finish the day. Right? Again, it's end of the week, Friday. It's a little bit unusual to see that on a Friday, but it was an unusual week in the S&P. But before I wrap up here, let me go back to be sure that I've clarified what each one of these things are. And again, I make that point. It may be useful. Oh, here you see it in the default where the volume profile they all have the same color scheme. Any of these colors can be changed to whatever you prefer. But I just want you to be careful if you're new to this type of trading where you're trading off of delta volume percentage. Don't confuse that with actual volume. So this can be helpful to have the up-down volume while you get used to it, or even in addition. Right? I mean, certainly there's room to put it over here. If you wanted to. Just a suggestion, right? Just because that looks like, right, at first glance, you might think to yourself, oh my God, look at all that sell volume that just came in, right? But the actual volume is much, much lower. Okay, before we wrap up here, how am I doing on time? Oh shit, that's 42 minutes. Okay, so let me come back over here because a couple of good examples here. The NQ, this is very effective. So I like to trade in the NQ, a 21 range. Let's get that off. A couple of good examples here because I was trading this on Friday. There's a few good spots here that I can show you where I think the value of not only the swing relationships, but as we're looking at a swing like this, paying attention to where that volume profile is. So if you look here over the course of the day, and I've got it condensed down here so we can see a bit more. So we come with that's 940. After bouncing here off of the open, we bounce down here. This ends up being the IB low. We get a nice big kick of a swing up here coming off of this low here. So as we push up here, I can again look within the swing. So I see a couple of things, right? So obviously I see the nice big volume delta percent increase as we go through that swing. But I also can look at within that swing, well, here's the POC, or so here's where the majority of the volume took place. So I could do this a couple of different ways. I will typically use our little line tool here that's in our toolbar here. So I'm going to take that and I'm just going to draw that down and I'm going to grab the high volume here. So I'm going to look at the high volume area over the course of this swing and I want to include the POC. Well, now if I drag this over here and just keep it going throughout the course of the day, if I can do it this way and make it longer. Okay, so now you look here. Let's get this back right on there. It's a little hard for me to squinch it and then lose the detail here. But there's a decent example. So within this swing, I see where all that volume was early in the day, right? So then it doesn't get challenged until we get to right here. So here's my value area. So again, within all of that swing, here's where the majority of the volume was, 68, 70% of the volume. Tap, 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 can't break it, right? Can't break it here, Here's testing the POC. Now we come down here to value area low, and then that's it for the rest of the day. Now there is one other one here, I know because I was watching this as I was trading it. Right, so I marked this off, so I thought I'd use this as a good example. So here, within this upswing here, I get it again. So here I see the POC, and I do the same thing. I use this is our little line tool where you can do it as a series of lines or just as a straight line. I use this all the time. If I double click it, I just get a straight line. So I'm just kind of wicking off here. Here's where all that volume was. So I come right over here, and when this was pushing up here, I know because I was trading this. So as this went up here, as we hit this point right here, that's a point of caution. All right, now let's put that in the context of what you might be looking at here. So as we make this swing, so I get a swing. All right, so you see it reflected here. I get the swing here where I get increasing delta volume percentage bar by bar. Right, there's variance. Then I get a tiny little pullback here. Do sellers seem like they're aggressive, like they're overly interested? Note I get a reversal here. Right, because the volume is higher than the last downswing. So I get this little pullback, I get a reversal signal. Now I'm going up, 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 up. Now in this bar, I don't know that it's done here because I don't have the pivot yet until I come down off of this. But as I'm coming up here, I want to look back left and see, hey, last time I got up here, what happened? Well, I can see this pivot was here, but more importantly, I can see where that POC was. And I bring that all the way across, and I go, hey, that's a point of potential resistance. As I get up there, right, not only do I get the pivot, look what happens to the cumulative delta, right? So now I come down through this downswing. Now, okay, so I might be paying attention here. So if I thought perhaps that I was going to get something like this, that we were going to do this and then go down lower, well, I'd be anticipating the swing up here would pause. Right, and I wouldn't see increase. Look at the individual bar by bar. I wouldn't see increasing cumulative delta through the course of that swing. Retrace, right? The volume is not higher, so it's not it's not technically per the way we define it a reversal system. Here I get higher volume than here, so I get the reversal signal here. Same here, I get a reversal here because it's higher volume than the previous one. On the downswing, so this is a lower high to this high, come down here and I get a higher high, so I've got conflicting signals here. Look what's happening to the cumulative swing delta here. That's not necessarily something you want to trade, but if you were looking at this going, okay, because it's very common, you see this in, if the IB high breaks and they get above it, often that will then become the support, and you see that's what happens down here. So they break it, back in, break it, now we're tamping here, so we have a lack of conviction on either side. Now look at the cumulative delta. Right now it started to increase. Now as I push over here, now it starts to go here. Now we get a push up here, and again in the NQ, that's a $460 swing. That's a 92 tick swing. It's bigger than it appears to your eye. So as I see this increasing here, now just because I get a negative percentage delta here doesn't necessarily mean panic sell. Like, oh shit, I got to get out of it. Now if I were in that trade and I was up, that amount in a 2 or a 3 lot, I'd probably take the profit when I saw that, but I'd be quick to be looking to get back in. Right? If I saw that, oh, it doesn't look like there's a whole lot of enthusiasm, because what I don't see is we're pushing back down towards VWAP or even the IB high. It's quickly reversed, right? And then we go again. Now here's a better swing that sells off, right? So here it is. Now, do I get enthusiasm amongst buyers? Well, certainly it's much less so than what came prior. Right? If I double click that, kind of sideways, 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 sideways until the end of the day, then we get something that's running here. So often if I'm trading this, what I'll look to do is I might start with a 1 or a 2 lot, and if I see it start to accelerate and I see aggression here amongst sellers via market orders, I might look to something like this and say, okay, well, I've got a little congestion here. If I'm in this, because I took a pivot here, and could have been something like this, I get a little swing, I see that the cumulative delta is still negative. If I wanted to go again, this is where I might be looking to add to try and push that lower as we come down here, and then it kind of chops, and then we get the end of the day ramp, right? Just like in the S&P, we had that big rip here. So as you're looking at this, as we're coming down here, okay, look at the cumulative delta. So you might say to yourself, okay, so potentially you could look at this and say, okay, well, I've got a little divergence in the cumulative delta. Swing by swing, if I look at this swing compared to this swing, right, I got a little divergence here. If I can double click that. Oh, shit, here, we'll just take it off. Right, but then once this starts, boy, big rip. Now, are we going to do this? Right? Again, it's always easy in hindsight. But if you're looking at that, does it look like we're going to do something like that? Very, very limited, right? But we're getting weaker and weaker as we're going up here. At the pivot high, I get an imbalance on a pullback, one more test of the high, and then it sells off into the end of the day. You'd likely not be closing or trading in the last 2 minutes in the NQ. After the market closes, but it's just visually, it just gives you more examples. Heads up, right? These are more, hey, heads up, potentially you've got a reversal here. But where it's really striking is when you see a swing. And then, as I'm trying to emphasize here, what we want to focus on is the relationship of the cumulative delta of the swing relative to the prior swing. Because what we're always looking for is this, right? Can I find that? And on the upside, can I find swing, retrace, and then another swing? So do those swing relationships help me? And if I'm thinking about potentially a target up here, if I see a big drop off in the cumulative delta comparing this swing to the next swing, if I see that I've got a big drop off here and buyers are losing enthusiasm, hey, that's probably a heads up to either tighten your stop or look at taking either a partial profit or full profit off of the move. All right, so I'm going to wrap there because I've gone much longer than I thought I would. I would tell you that the best way to acclimate yourself to this is to request a demo, and we send you a full working version of all of our indicators, not just the order flow tool suite here. We send you every one of our indicators to use for 5 days, and it's not 5 calendar days, it's 5 trading days. So if you order it on a Friday, we're not going to count Saturday and Sunday as 2 of your 5 days. So you get 5 full trading days to use these. There's no restriction on any of it. It's every single indicator we make and we have designed. This is just one of many, but I have found this to be very effective, and as we've refined it and improved it, it's really the swing by swing relationship that I think makes this product unique. And I think you'll find there's real value as you're trading this on the hard right edge when you start to see these kind of things move, and then the opportunity to add as the trend starts and continues. All right, with that, I will wrap it up as I went quite long here, but I think that'll give you a whole lot of things to think about here. And as always, if you have questions, we're very available. Just reach out to us. We're happy to answer any of your questions, whether you're in the midst of a trial or you've made a purchase or you're looking to add this to any of your indicators. I should mention in closing here that you can apply this to any type of chart, whether it be a minute chart, range chart, Renko chart, tick chart, volume chart, whatever you like to trade. You're going to get the same swing relationships and those same totals and or signals at every one of the pivots. And then again, remind you, you've got 4 different types of pivots to use based on your trading style and your preference. Okay, with that, I'll wrap it up and wish you guys good trading.